I have a small precision. I'm not the Homo Deus of the Jefisma because the characteristic of God is that it creates mankind. So the real Homo Deus is in this room because the man that created me administratively, Alex Schaub, is here. He recruited me in the commission. He made my career in DG competition and is one of my excellent predecessor in this function. Actually, after he left, we had to divide it in two because it was too big, so I just have half of it. So I'd like, while I'm thanking, I'd like to thank Alexis and Axel Weber for their kind invitation to address you today on a topic that is very topical. I also like to thank you, Judith, because you managed to maintain friendly and constructive relationship with, in particular, the Jefisma, I'm sure other corners of the Commission, in an overall environment that is, as we all know, uncertain and complicated, and I'm sure this helps and will help when it will be less uncertain and less complicated, which I'm sure will come soon. Today I'd like to share with you what is our vision for the European financial sector in the context of the ongoing work that we carry out on fintech. You've heard earlier this morning, I think, Roberto, Viola, this is a work that we have decided to carry out together because we believe in silo breaking. We believe in the interest of having a global view of global issues. And that's why we have prompted our people to work together, trying to forget the natural tendency to be territorials. Let me start by stressing that the Commission aspires to a thriving and globally competitive European financial sector, a sector that can take advantage of the most cutting-edge technology to bring benefits to the European economy and society. The financial services sector is one of the key pillars of the European single market, and it is the key source for funding for all European businesses as well as consumers in their daily lives. But this sector has changed significantly in the last years, and it is still changing very significantly and very quickly. It first has changed in response to post-crisis market condition and regulation. And no change in consumer expectations, technological innovation, new competition, all this is having a major impact on the structure and the working of the financial sector. It comes with challenges, it also comes with opportunities. And this is what you have been exploring today. I recognize that to achieve a globally competitive financial sector, it's crucial that the European policy and regulatory framework supports and encourages firms to harness the opportunities from innovation. And if we get this right, the price will be there. But it is important to ensure the safety and soundness of the market and that consumers and investors are adequately protected as well. I would like to explore this trade-off in my remark and focus my remark first on some of the main changes and challenges to the industry as we see them, and then proceed with describing some of the initiatives that are already underway, and finally share with you some thoughts about what may be the next steps. So the changes and challenges. Digitalization has transformed many industries across the world, and the banking sector is certainly no exception. Mobile and digital technologies have completely changed the way consumers interact with their financial services provider. And incidentally, I mean, we see a face of it in the developed world. I was in Cape Town for the FSB plenary. It's a completely different story, but just as interesting in emerging and developing countries, where they make a leap and they jump directly from no banks to mobile intermediation and banking on mobile, which is a quite interesting development and brings many, many challenges and opportunities, in particular in Africa. So customers and investors now want to access services anytime, anywhere, including more and more often from their mobile phones. While developing innovative services, providers have to therefore offer fully digital and seamless processes to the clients. Incumbents have to compete with new entrants, startups, offering fully digital services and delivering superior digital customer interactions. These changes are, of course, bringing huge benefits for consumers, and we are seeing an increase of transparency in the sector, more convenience, and cheaper services. But of course, these developments also bring new risks. First, with ever-increasing amount of transactions executed from mobile phones, sometimes through new types of providers, high security standards must be guaranteed to all customers. Consumer organizations stress that everyone should be protected when it comes to the use of personal data, for example. Consumer data protection rules are essential, and new ways of using data, possibly used by providers to better target their offers, such as data profiling, should be looked at carefully. The ability to better target offers and adapt them to the specific needs of consumers can, of course, have clear advantages, but it also carries a number of risks. Finally, we need to bear in mind that not all consumers want to enter into the new digital world. Some old-fashioned people will always prefer bank branches, human interaction, or human advice. And we must also ensure that these clients do not get excluded. At the Commission, we are also not blind to the challenges banks face in these periods of fast changes. And these stem not only from changing consumer expectations, but also, to name but a few, from the low interest environment, new competition, revamped regulatory and prudential requirements, the incredible speed of technological change, and the struggle to keep up when having legacy IT systems, for example. I saw that in the Swiss Finance Council discussion paper that you published today, a suggestion is that the bank of the future might be a platform bank that connects the services and product providers it is collaborating with. So a plug-and-play system hosted by the bank. Another vision that is developed in other corners is that provision of financial services will become part of everyday activities, even when connecting with other platforms. And for example, when using Facebook, so bank will have to learn how to serve what they do not own. Last month, there was indeed news that Facebook users can now start making transfer through TransferWise without having to leave Facebook Messenger. So it's coming. Either way, it will be a challenge to make the bank's legacy system talk smoothly to the new player's technology, and the other way around. The key to both scenarios seems to be developing robust and secure ways of cooperation and interoperability between traditional providers and new entrants. In the middle of all this change and increased competition, banks are calling for a level playing field. Same activity, same rules. I do believe that the EU Financial Services Regulation recognizes this principle. It is activity-based, so anyone who wants to provide a regulated service has to ask for a license and has to comply with the rules. But we should also honor the principle of proportionality, and I will come back to this later. The Commission's current stance in relation to technology in financial services can be described for the most part with three principles: neutrality, proportionality, and soundness. So in terms of financial stability, integrity, and security. However, we are now considering whether the European regulatory, but also supervisory framework should become more supportive and encourage firms to harness the opportunities from fintech. We did seek to encourage technological innovation in the field of payments in the past years, initially by creating new categories of institutions in our legal framework, but also more recently with the adoption of the revised Payment Services Directive, so-called PSD2. With this directive, we are indeed opening the market to a variety of new businesses, such as online payment solutions or information account aggregators, for instance. Besides, digitalization of the banking sector was at the heart of the public consultation on retail financial services launched last year. Disruption had an impact first on retail financial services, payments and lending mainly, and innovative online services represent a major opportunity for enhancing the single market in retail financial services. However, to make this happen, a number of obstacles have to be overcome, and in particular the need for firms to be able to identify consumers from a distance, the so-called Know Your Customers requirement, and this in full compliance with anti-money laundering rules, which, as you know, are being tightened as we speak. eIDAS regulation already creates an interoperability framework for the national eID systems that will be notified soon by member states. And at the same time, the fourth Anti-Money Laundering Directive acknowledges new developments regarding eID and accepts digital means under eIDAS. Considering these new developments, the Commission will propose initiatives in this area in the upcoming action plan. All financial services providers should be able to offer online services easily and across border in compliance with new anti-money laundering rules. On the investment side, the Commission also looked into these issues in the context of the Capital Markets Union Action Plan, particularly interesting in the online advisor area. Web-based distribution channels may facilitate investors' access to financial services, and they have the potential to improve access to financial advice for those who find its price too high. However, new technology also gives rise to challenges in meeting conduct of business rules where the human interaction is significantly reduced. Let me be clear, investment advice is regulated by MiFID regardless of the type of interaction with the client. Face-to-face and online advisors are subject to the same conduct standards to ensure that the recommended product is suitable for the client. As part of this conduct regime, robo-advisors are required to carry out suitability tests with the client, and as of January 2018, will have to provide retail clients with suitability reports. MiFID II clarifies that the responsibility to undertake the suitability assessment lies with the investment firm providing the service and cannot be reduced by the use of an electronic system. Being aware of the rapid technological developments, we are exploring the impact of online distribution on investor protection through a study. This study will analyze how online platforms comply with conduct of business rules and how mis-selling risks are addressed in online business. Depending on the outcome of this research, the Commission will consider whether further EU action is necessary or not. I'd like to say a word about crowdfunding. Crowdfunding is still small in Europe, but it's growing fast. If appropriately regulated, crowdfunding has the potential to become a key source of financing for SMEs. EU member states have begun to put in place national frameworks to support the growth of the sector and to ensure investors are appropriately protected. In the framework of the CMU, the Commission published a report that explains the market and regulatory landscape in this dynamic field. Crowdfunding in the EU remains still largely local. A number of reasons account for this, including home bias and the fact that investing in a local company or venture takes less of a leap of faith than investing in an equally worthwhile opportunity hundreds, if not thousands of miles away. However, divergences in national regulatory frameworks and in the interpretation of EU rules applying to crowdfunding activities could create obstacles to the development of cross-border business and lead to market fragmentation. The need to comply with different requirements may be too costly, prevent smaller platforms from achieving the scale necessary to operate cross-border. In addition, divergences in regulatory regimes may pose challenges to cross-border investor protection. For these reasons, the Commission is keeping developments in the sector under close review and meets regularly with ESMA and EBA, but also national regulators and the crowdfunding sector. What we want to ensure is that the Commission is able to respond in a timely manner if further steps to support regulatory convergence in the area of crowdfunding are needed. And this both to promote the development of the sector and to ensure adequate investor protection. So what happens next? Of course, fintech developments are much broader than this. They are indeed cross-sectoral, and they impact the whole financial sector. They do not only make the financial sector more technological, they also bring the technology sector more and more into the realm of finance. And for this reason, we have decided to create a fintech task force last year, Roberto and I. All relevant Commission services are part of this task force. It's led by our two DGs, but is joined by DG Competition for very obvious reasons. It is also joined by DG Just, that is in charge of anti-money laundering. And it is basically open to all the sectors of the Commission that have an interest in this. We also plan to open it outside of the border of the Commission to the ECB and to our colleagues in the various ESAs. We believe that we need to take such a multidisciplinary look at the issue brought about by the confluence of finance and technology. But if our aim is to support an innovative and competitive financial sector across Europe, we have to ensure our regulatory framework and policies are indeed supportive for firms and customers. EU financial regulation is activity-based. That means that any firm carrying out a specific regulated activity has to comply with the relevant EU rules. This in a proportionate manner, of course. So, same activity, same rules, and proportionality together ensure a level playing field between all market participants. In some cases, though, innovative firms, be they startups or long-established financial institutions, may find it difficult to identify the relevant framework due to hybrid models or new ways of offering services. And in this respect, we are very aware that the Swiss government recently launched a consultation on possible changes to be introduced in the licensing regimes for fintech in Switzerland. On our side, our task force is assessing the technological development and new business models to determine whether existing rules and policies are fit for purpose, or whether new licensing and passporting regimes are needed, for instance. We need them to ensure that innovative services can emerge and expand easily across Europe. As I mentioned earlier, we're also looking at how financial institutions and new tech firms cooperate, for instance, by outsourcing more and more activities to other providers. While outsourcing may bring significant efficiencies for incumbents, it could also bring operational and supervisory challenges. The task force is also exploring these issues and will assess whether the existing outsourcing requirements in the financial services legislation are still adequate. Although this may appear somewhat unusual for the Commission, as we are not supervisors, the task force is also looking beyond regulation to understand the impact of supervisory practices. Innovative firms, regardless of whether they are startups or established in the market, regularly express concern that EU and member state supervisory practices limit their ability to innovate and their ability to offer cross-border services within the internal market. They can be subject to disproportionate or inconsistent or overcautious applications of regulatory requirements which were not designed for their new approaches of ways of doing business, especially when their business model does not fit easily into the existing framework. Recently, regulators and supervisors in a number of member states have tried to be more proactive and are developing new methods to support the development of innovative businesses while learning from firms. And these initiatives include hubs providing guidance on applicable regulation, teams focusing on policy implications of fintech, and in some member states, supervisors are working with firms as they are testing their activities. I'm sure that you have heard of regulatory sandboxes. I know that in Switzerland, the Federal Council is also currently consulting on its draft project for an innovation sandbox. Our task force is looking at the different practices and closely monitoring the path that global fintech hubs, including Switzerland, are taking. We are analyzing whether there is a role for the Commission in that area within the single market and how we may best facilitate such activities. However, in the meantime, we encourage new supervisory approaches and cross-border cooperation when supervisors deal with innovative solutions. Consumer protection standards should remain intact. We believe that this should help technological innovation to better adjust to the existing framework and supervisors to the changing financial landscape. Finally, the task force is exploring cutting-edge developments such as distributed ledger technology, as well as essential issues related to cyber security. Besides the work carried out in the task force, the Commission will organize a conference on fintech on 23 March, so very soon, in Brussels, where most of these topics will be discussed. Panels gathering representatives from the industry, both incumbents and fintech startups, as well as consumer organizations, national regulators, and supervisors, will share their experiences and contribute to the debate. Digitalization and fintech are attracting a lot of attention, and the amount of interest in participating in this conference far exceeds the capacity of the largest of our conference facility. So, in a word, if you're not yet registered, you should. So before I finish, I want to leave you with one final thought. Regulators have a role in ensuring that the regulatory framework is fit for the new digital reality. But our work alone will not be enough. Developing a framework, working methods that are fit for an innovative digital world requires commitments and cooperation and efforts from all stakeholders. So I will invite you all in your respective positions, roles, the national competent authorities, the industry, the regulators, the supervisors, not to look only at the regulators for solution, but to engage, commit, be creative, as we all explore solutions for building a true technology-enabled European market for financial services. And as a first step, I expect, as I said, to see many of you at our conference on FinTech on 23 March. On this note, ladies and gentlemen, thank you very much.